Just wanted to get your recommendations. There may only be one place to do this. I'm new into commercial brokerage, and so looking at getting my, business brokerage certification. What's your recommendation for that? And then also just wanted to know what you're seeing is the multiples still a range for most business markets of 3 to 7 times, the EBITDA or the add backs, and where's the best resource for looking for things like that if it's different for different business types.
So a couple things. It depends on the size of business you're dealing with. In businesses that are, kind of Main Street, under $2 million, your EBITDA, your multiples are not going to be anywhere. Your multiples are going to be probably anywhere from 1 to 3 times your SDE, your seller's discretionary earnings or owner's discretionary earnings. You're not getting, 6, 7 times EBITDA until you get into middle market companies. The multiples, yes, it's a range. Everything's a range, and what determines whether the business is going to go to the top of the range or the bottom of the range largely has to do with 3 key things. Okay, first, the quality of their books and records. So if the books and records are sketchy, they're running everything, including the kitchen sink, through the business, then that's going to drop them down towards the lower end of the range, because unless you have a buyer who's already in the industry who really understands, and how do you verify all that? So your due diligence process is a little bit harder. It's going to be a little more complicated depending on the type of business.
Sure.
Certainly there are some things, like, for example, if you have a restaurant and you have auto expense, well, do they have a catering van? Do they do delivery, or maybe the auto expense is legitimate business. But if you have like a fitness studio and you see auto expense, well, it's probably discretionary for the owner, because why do you need, you don't do any delivery or anything else for a fitness studio, right? So, so first, quality of books and records. Second is owner centricity. If the owner is a sole decision maker and everything channels up through the owner, and the owner is, let's say, has all the relationships with all the clients, customers, has all the relationships with the vendors, then there's a problem there. You've got those relationships have to be able to transfer. So again, that's going to slide down towards the lower end of the range rather than the higher end of the range. And then the other thing is customer concentration. So if 3 customers are generating 80% of your revenue, that's a huge risk. And at the end of the day, buyers value businesses based on perceived risk. Yeah, there are other factors that go into that as well, but those are 3 of the biggest. Another one would be the labor force. So if you have 10 employees, but 4 of them don't have proper paperwork to work in the United States, then again, it's like, does a buyer want to take on that potential liability? Maybe yes, maybe no. Or does a buyer want to replace 40% of the workforce from day one? Probably not, right? So again, it goes back to that risk. And the higher the risk, the lower the value. Things are going to drop.
When you're looking at that piece of it, the labor force, do you factor in the turnover ratios for a business?
Initially, upfront, no. I don't. I mean, when I'm just trying to value and price a business, I'm trying to do it as quickly as possible to determine whether it's worth moving forward. But as we get in and start marketing a business, and I start digging deeper into some of the operations of the business, so that we can respond to questions that buyers are asking, things like that. If we uncover certain things that we know are going to cause problems, then we might make adjustments to pricing. You know, the same thing that goes though, if you have a manufacturing company and all of a sudden they land a really nice, you know, fat 5-year contract for parts or something, well, we're probably going to increase the price because now you've got a
Mhm.
guaranteed stream of revenue. So price adjustments during a listing period are fine.
Hmm.
Yeah, you can do that
Yeah.
when they're
Okay.
warranted,
Yeah.
up or
Okay.
down.
All right. Cool. Good. Thank you.